Welcome to Rayat Online School Education 2021-22 Sadhguru Gadge Maharaj College, Karad. Guidance by Principal Dr. Mohan Rajmane Sir. Standard 11th. Subject Bookkeeping and Accountancy. Myself, Patel Ma'am from SGM College, Karad. Today we are going to see the problem number 2 for the journal. The last lecture which we have seen, that was about the journal problem number 1. Today we are going to see journal problem number 2. This is about the journalizing the following transaction in the books of Sankalpa General Store 2019 July, and the transactions are given in this one. The first is started business with cash rupees 1 lakh, stock of goods worth 50,000 and computer 50,000. Then is transaction date 4, second transaction, purchase goods from Karina on credit rupees 10,000 at 5% TD. Next is transaction number 3, date 10, sold goods to Priyanka rupees 20,000 at 10% TD. Next is the transaction number 4, date 13, paid into State Bank of India rupees 50,000. Next is date 15, goods worth rupees 2,000 lost by theft. Next is 18, paid for rent rupees 4,000. Next is 20, received cash of rupees 17,500 from Priyanka in full settlement of her account. Next, date 25, paid for stationery purchase rupees 8,000. Next is cash sales rupees 90,000. Next is paid audit fees rupees 5,000 by check. Okay, so let's start doing this transaction one by one into proper sequence wise. First we will read the transaction and then we will see the journal entry about it. This is the transaction number 1. As you all know, now only I have read it out all the transaction. Now we will see each transaction journal entry into detail. So the first transaction is about that is July 2019 July 1, started business with cash rupees 1 lakh. Whenever you start a business, at that time what comes in? Cash comes in. Next is stock of good worth rupees 50,000. Next is computer 50,000. So from this you can understand, when only if it is given started business with cash, okay, at that time it will come cash account debit to capital account. Yes or no? You all know very well, as you have seen the analysis of the transaction, that debit what comes in. So cash comes in. So cash account will be debited. So you can see the format is there in the front of you, journal, date, particulars, LF, debit, credit. So cash account debit, so amount you will write in the debit side. So cash account debit 1 lakh. As cash comes in, stock of goods account debit, how much is that? 50,000, because here stock is there, goods company, you cannot have a goods account, so you have to write stock of goods account. Okay, so stock of goods account debit 50,000. Next is computer account debit 50,000, because computer comes in. So 3 things has come in. Always what is there? Cash is there. But here what is given? Cash account debit, stock of goods account debit, computer account debit. Everything comes in. So we will put on to the debit side. Okay. And credit will be to capital. Because whenever you start a business, okay, with cash, goods, computer, this is all the capital. So you will add 1 lakh plus 50,000 plus 50,000. You will write to capital account. How much? 2 lakh. Okay. Narration is very important. You will write the narration by seeing the transaction. Started business with cash, goods and computer. Got it, everyone? This is your transaction number 1. Always in the first transaction, business is being started. Every time the common is given, started business with cash. So you can write cash account debit to capital account. Cash comes in, proprietor is the giver of the capital. Okay? Got it, everyone? But here, as cash comes in, stock of goods are there, computer is there, it will be debited and capital will be credited. So you have to write in this way, which you can see in front of you. Cash account, debit. Stock of goods account, debit. Computer account, debit to capital account, being started business with cash, goods and computer. Transaction number 1. Next transaction is dated 4. Purchase goods from Karina on credit 10,000 at 5% TD. Okay, at 5% what? TD. Okay, see the journal entry in front of you. Purchase goods from Karina on credit. So, purchase goods. Purchase is an expense. And who is the giver over here? Karina is the giver. Whenever, remember, it is given, purchase goods from Karina on credit is given. Whenever the word credit is given, always remember the name of that person will come. If it is given, purchase goods for cash. So what will come? Purchase account debit to cash account. But as the name of that person is given, purchase goods from whom? Karina. So you will write purchase is an expense, Karina is the giver. Now the next is we have to remove 5% TD. How to remove this? 10,000 into 5 upon 100. Okay? When you remove, you will get the answer 500. So 500 will be less from 10,000. So the answer you will write on the debit side is 9,500. On the credit side, you will write 9,500. Got it, everyone? Like always remember, whenever trade discount is there, trade discount should be removed and should be less from the main amount. Okay? Because trade discount is not there. Means that trade discount you will remove. But name will not come directly, you will less from that. So you will write the journal entry, purchase account debit 9,500 to Karina account 9,500. Being purchase goods from Karina on credit at 5% TD. Understood how to remove the TD? You have to do 10,000 into 5 upon 100. When you remove like this, you will get the answer 500. This 500 should be less from 10,000. You will get the answer 9,500. That is your transaction number, transaction dated 4. Got it, everyone? Next one we will see is date 10. That is sold goods to Priyanka 20,000 at 10% TD. Sold goods to Priyanka. So whenever to whom you sell? Priyanka. Who is the receiver? Priyanka. And when you sell, it is an income. So sale is an income. So you will write the entry Priyanka account debit to sales account. Got it? Priyanka is the receiver. Sold goods to Priyanka. So who is the receiver? Priyanka. And sale is always been credited because sale is an income. In this, you must have understood that sales are always credited and purchase are always debited. Because we have to follow here the golden rules of accountancy. Purchase is an expense. It will be debited. Sale is an income. So it will be credited. Now we have to remove again trade discount. Trade discount we have to remove again 10%. On 20,000 we have to remove 10%. How to remove? 20,000 into 10 upon 100. You will get the answer 2,000. This 2,000 you will less from the main amount. 20,000 minus 2,000. You will get the answer 18,000. This answer you have to write on the debit side as well as on the credit side. Got it, everyone? To remove it is very easier. You have to just apply the formula. Whatever the amount come, that amount you have to less from the main amount. Directly you will write on the debit side. So that is Priyanka account debit to sale. So because Priyanka is the receiver, sale is an income. Got it? And you will write the narration being goods sold to Priyanka on credit at 10% TD. Got it, everyone? Yes or no? Okay, let's move ahead and we will see the next transaction, 15 date. Goods worth rupees 2000 lost by theft. Okay, so for this entry specific, which is always we have to learn this entry. Entry for this is loss by theft account debit to good lost account. 2000 on the debit, 2000 on the credit. Always remember this entry lost by theft entry, as goods worth rupees 2000 is lost by theft. Okay, you can write for this loss by theft account to good lost account, or purchase account is also written, but this is the better one. Loss by theft account, again loss is there, so whenever expense is there, loss is there, it is debited. And good worth rupees 2000 is lost by theft, so good is also lost, so you will write on the credit side. For this specific entry is there, we have to learn it. Loss by theft account debit 2000 to good lost account 2000, being goods lost by theft. Understood? Okay, let's move ahead and see further. The next entry is about date 13. That is said, paid into State Bank of India rupees 50,000. Paid into State Bank of India. Remember, always when you pay, you are paying, cash goes out. Who is the receiver? State Bank of India. So State Bank of India is the receiver, cash goes out. Okay, so 50,000 on the debit, 50,000 on the credit. Remember, when you do not understand at once, you have to read the transaction again and again to make you understand who is the receiver, who is the giver, what comes in, what goes out, etc. So the word is given paid into State Bank of India. That means State Bank of India is the receiver because you are giving to them. And what goes out from our side? Cash goes out. So State Bank of India debit 50,000 to cash account, 50,000 being cash deposited into State Bank of India. Got it? Next transaction is 18. Paid for rent 4,000. Paid for rent 4,000. So when you pay, now only I said you what goes out? Cash goes out. And what you have paid? Rent. Rent is an expense. Cash goes out. Rent is an expense. Cash goes out. Remember, when you pay rent, cash goes out. And when you get rent, that means when you receive a rent, at that time cash comes in. Okay, so paid for rent rupees 4,000. For this, the journal entry will be rent account debit to cash account, 4,000 on debit, 4,000 on credit, being paid for rent. Got it? Yes or no? Okay, only I will say the reverse entry for this. Now the question is, transaction is paid for rent 4,000. So you wrote rent account debit to cash because rent is an expense, cash goes out. If it is said rent received 4,000, then what you will do? Only you will reverse the entry, because when you receive the rent, what comes in? Cash comes in. And rent when you received is an income. Okay, so rent you can give also. When you are living on rent, you give, you pay for rent, and when you receive a rent, it is always an income. At that time, cash comes in. So for this transaction, you wrote the entry, that is rent account debit to cash 4,000 on debit, 4,000 on credit, being paid for rent. Next transaction is about date 20. Received cash of 17,500 from Priyanka in full settlement of her account. Remember what it is said? Received cash of 17,500 from Priyanka in full settlement of her account. So you are receiving cash of 17,500 from Priyanka in full settlement of her account. When the word comes, that means this transaction is connected with the above transaction, that was there sold goods to Priyanka 20,000 at 10% TD. Remember, it is connected with the above transaction. The above transaction was sold goods to Priyanka rupees 20,000 at 10% TD. You remove 10% TD, 20,000, 10% came 2,000. You less from that, your answer came 18,000. That means 18,000 you sold goods to Priyanka. Now, what is this transaction? It is said that you have received from Priyanka. Actually, Priyanka should give you how much? How much? 18,000. But here it is given receive cash of 17,500. That means 18,000 minus 17,500. How much is left? 500. 500 is the discount allowed. Okay, that means when you receive cash from Priyanka, discount is allowed, that is 500. For this, you have to write this particular journal entry, which is cash account debit 17,500, because how much cash you are receiving? 17,500. Okay, discount allowed account debit 500. Now only I said you how 500 came. Because this Priyanka is connected with the last transaction where you have sold to Priyanka 20,000 of rupees goods at 10% TD and you removed the answer 18,000. And you see the difference, that is the 500 of rupees different, which is the discount allowed. Discount allowed account debit 500 to Priyanka account 18,000. Got it everyone? Remember always when it is given in full settlement of our account, at that time you have to remember above anywhere Priyanka name is there or above anywhere it is connected, you have to check it out. Okay, the narration for this is being cash received from Priyanka and discount allowed. Clear? Next transaction is about 25 date. That is paid for stationery purchased 8,000. Now, whenever you pay, now only I said you what goes out? Cash goes out. And stationery, when you purchase, it is an expense. So, for this, the journal entry should be stationery account debit to cash account. 8,000 on debit, 8,000 on credit being paid for stationery. Got it? Okay, so that was a transaction number dated 25. Next transaction is 28. 28 date, it is said cash sales rupees 90,000. Okay, remember, and I said you earlier, when you sell something, what comes in? Cash comes in, and sale is an income. Okay, when you sell something, cash comes in, sale is always credited because it is an income. As you know the rules of golden rules of accountancy, that is related to personal, real and nominal. Nominal accounts say debit all expenses and losses, credit all incomes and gains. From this incomes and gains, so sale is an income, it should be always credited. That is cash account debit 90,000 to sales account 90,000 being goods sold for cash. Okay, I said you earlier also you have to learn this, that purchase is an expense and sale is an income. Purchase account is always debited and sale account is always credited. And the next transaction is about paid audit fees by rupees 5,000 by check. Okay, now audit fees, now again paid it is there. That means I said you what goes out? Cash goes out. But the word check is given over here. The word check which given over here indicate it is related to bank. Of course, check is related with what? Bank. So you have to write like audit fees is an expense. And if check is not given, if it is given paid audit fees rupees 5,000, just if this much is given, you would have wrote audit fees account debit to cash. But the word check is given over here, you will write audit fees account debit to bank account, 5,000 on debit, 5,000 on credit being paid for audit fees. Got it everyone? Yes or no? So in this way, today we have seen the transaction all related to Sankalpa General Stores. Okay? So enough for today. Thank you very much.